Hi, I'm Don McCulley.
And I'm Andrew Kuykendall. Welcome to This Stuff's Complicated, our attempt to break down into bite-sized pieces the world of stop-loss and medical stop-loss captives.
I like my salad in bite-sized pieces.
Yes, well, if you're going to have some lettuce, salad's good, but it's better as a jam band. In fact, the only jam band I've seen in all 4 continental U.S. time zones. And when I saw them in New Hampshire, they played Everyday People, Sly and the Family Stone classic. But Don, if we're going to underwrite Everyday People, we got to have some basis to work from. What are we talking about today?
We're talking about demographics, Andrew. That's great. Fantastic. So insurance is based on the law of large numbers, which means we're going to capture premiums related to specific claims. In the property and casualty world, that's by a line of business. So you're going to capture the premium related to a specific claim, and you're going to crunch all that stuff. In employee benefits, it's just any claims to that population and better specifically to that person. Having said that, in our world, stop-loss group captives, we really started out looking at this business from a fully insured transition. And so insurance may be based on the law of large numbers, but none of our employers were credible, and none of them came with claims detail. So we had to look at it a different way.
And credibility in this instance means, is the population of enough size that we can accurately predict what's going to happen? If you have 10,000 people, we can be much more accurate with our expectations than if you have 150.
Or in our world, we're trying to get to above 1,000 people. So we create credibility for smaller groups. We know that credibility is harder if you're putting together 40, 25 life groups versus 25, 40 life groups to get to 1,000. But you still need to get that claims detail. And when you don't have it, it's the demographics. It's the age, sex, and location of the population. Then we're looking at the network differential. And then we're taking into account whatever else we can capture about those folks. And that's hard, because it then rolls into the next thing, which what happens when your population changes? Because people will acquire, they'll dispose of a line of business, there'll be a reduction in force. There's many different ways that people can grow organically and inorganically in those populations. So once you're in that stop-loss policy, you're now taking on more people or shrinking, and you don't have any information about why they're moving.
And this is something that the stop-loss companies pay very close attention to. Most policies will have the written into the policy that if you grow or shrink by more than 10%, they maintain the rights to re-rate your policy. That's how important this is.
Yeah, Andrew, and I got hung up on that a couple of times because I always said, you don't have to worry about it if you grow. You only worry about it if you have to shrink. So we had like this 115 life group one time, and they only grew by like 10 employee lives, which didn't seem like a lot. But when you saw what happened, their employee-only population shrunk and their family population went up significantly. And that started putting stress on the individual specific limit and the aggregate corridor, and that required a re-rate even though it was less than 10%.
And the big difference there is if you are a single person, you count as one life on the plan. A family can be 3, 4, 5, or 8. So it's not just the individual employees that are being registered here. It's every single belly button covered by the plan.
And belly button's important to take into consideration because now we're moving into the world of AI and we're starting to capture more tools so that member population becomes more and more important because people are realizing, hey, those members mean as much, because we're talking about populations of an average of say 150, right, on a plan, but it's 4 to 6% of that population that causes all the claims. And when I say all the claims, that's 90% of claims come from 4 to 6% of the population. You agree with that number? I can't remember where you are on that
on
one.
a dollar basis, absolutely, yes.
Okay, but it's a very few people that drive it. And at the end of the day, we still want to have insurance where you're paying known claims out of your own pocket without carrier overhead, without premium taxes, and then you buy insurance for unknown claims. And the demographics feeds into all those things because at the end of the day, when you don't have any claims detail, it's harder to start picking where your individual specific limit is with just premium.
And there is no good demographic or bad demographic. You just need to rate and underwrite and make sure that you're appropriately funded for whatever demographic you have.
But in 2010, when we got into space, there was a bias against certain populations, right? And so we've talked about this in the past, both in this series of conversations we're having and also in our professional lives where We used to think that the younger male population of the technology was good risk, better than all others. And it was, hey, you want a homogenous group of people. In actuality, what we've seen is specialty meds has changed all that. And homogenous programs don't always do as well as heterogeneous, because just like the demographics of a population are heterogeneous, so are inside the industry. So a homogenous population within an industry code has not proven out to be more successful than heterogeneous stop-loss group captives.
It's ever evolving. That's for sure.
Ever evolving is the right way to look at it. So as we're talking about demographics, we remember when we're talking about three big picture items, right? One is insurance is based on the law of large numbers. The next is the impacts and reasons for changing things during the term of a contract. And lastly is how you pick where you're going to buy insurance, where your known claims are versus your unknown claims. And if we can get those three messages across on this episode, that would be successful.
Fantastic. Thank you very much.
All right. So I'm Don McCulley from Mainline Studios and the Podcast Factory in Berwyn, Pennsylvania.
And I'm Andrew Kuykendall, sitting right next to him. Have a great day, everybody.
Thanks very much.